Hey, welcome to the Closing Beat here, everybody. Happy Tuesday. Hope you're having a great day here today. I write the day of the week now on my new sheet, so I can't mess it up. Hey, anyways, we're playing a game. It's called Guess the Dow. We're financial advisors here, so we like to have a little bit of fun when we can. If you want to go over to our website there, bottom right-hand corner of your page, you can put in a guess where you think the Dow is going to close next week. If you're closest without going over, we'll send you $100. If you're one of our customers, we'll credit your account. And this week also for our customers on Thursday, which is 2 days from now, we're going to be doing a class, a little 401k tax advantage. If you have company stock in your 401k, what I want you to do with that so that we make sure you save a little bit on taxes, actually quite a bit on taxes. And I go through all of this really quickly because we got a lot to cover today. So I hope if this is not your first day, maybe I'll talk a little bit fast. That's just because we're in the thick of earnings season. There is a whole lot going on, and I want to try to share all of it with you as quickly as possible. You got the Dow higher by 177 on the day, 20 points on the S&P, and 47 on the NASDAQ. Here's what basically happened. We started the day, the markets were higher thanks to Coke and United Technologies. So if we go over to the charts here, should be able to do this here. There you go. The market started a little bit higher, largely because of the earnings that came out of Coca-Cola. It was a good earnings announcement. A lot of people didn't have really high hopes based on what happened last earnings report, where the CEO was sort of negative and thinking there was going to be some real issues there. Well, basically, he had a comment that said something like, you know, it's the storm that never came or something like that. So everybody was very excited. Of course, they beat on earnings. Everything looked really good overall. They beat on revenue and they raised guidance. So sort of the triple whammy of the earnings reports that you like to see there. And then you had United Technologies. They also did well. So they were a little bit higher on the day, and that helped the market start just a little bit higher. It was positive news. Everything sounded pretty good. Everybody was pretty excited. You get existing home sales. They came out, and existing home sales they missed, right? Less homes sold than expected. And you go, but that's bad news, right? Shouldn't that have hurt the markets? Well, investors chose to look at that in a way where they say, hey, that now makes the Fed have to cut rates. There's just another data point that makes the Fed have to cut rates, and so the probability of them cutting rates went a little bit higher. And so even bad news was good news to start the day. You got the debt ceiling deal done. Basically, the government's just going to spend as much money as they want, and they're not going to fight about it anymore. Yay, right? I don't know where you stand on that, but it seems a little crazy to me. Go spend as much as you want. So essentially the Democrats got what they wanted, Trump got what he wanted, and the market still held up higher through all that news. European stocks overnight, they were higher. Great earnings out of Europe, by the way, if you pay attention to those stocks that are traded in Europe, but also listed on our exchanges here. Also very good. And the ECB over there, which is their equivalent of our Fed, they're also going to cut rates. I believe they do it tomorrow. Well, it'll be... with the time change, it'll be like 2 days from now, I believe. And they're going to cut rates by 10 basis points, or at least that's the consensus at the moment. Well, all that good news. Then about 1:45 today, you got a breaking headline across the board. Everybody found out that there's actually a group of U.S. delegates that are going to head to China next week while Congress is on recess, and they're going to start talking about the trade war again. They're going to start negotiating again, and boom, just like that, you got 70 points in the Dow. I mean, like split second, 70 points higher. Within a 5-minute period, you had almost a 100-point gain in just the Dow and almost 10 on the S&P. So it was a really, really good little move there. And so there you go. You got a recipe for a higher market today. Now, like I said, we've got earnings in focus, and I'll start with the after hours movers here because that's probably what you're focused on. This is all the stuff that's being reported right now. You got Visa. It's actually kind of flat after hours, at least last check for me. They reported earnings, beat on revenue. Remember, yesterday we pointed out that this is the most consistent stock of the day that was going to report earnings. 95.6% of the time they beat on earnings, and 89% of the time they beat on revenue. Well within range, everything went well. You got to trust the stats on this one. Good job for Visa overall. Got conference calls going on, so the stock could be wiggling around a little bit. You got Chipotle higher after hours. New all-time highs, by the way, poked up there. After hours, you got a beat on earnings, beat on revenue, and a beat on guidance. So the triple whammy there. These are great earnings, by the way, after hours. You know how I'll go over it in a second. Anyways, they now 18% of their overall revenues come from online sales, people that use their phone to order a burrito and then they go pick it up or they have someone deliver it. That represents an exact 99% year over year growth in terms of doing that online. So that's pretty awesome. So the stock's higher up after hours. Then you got Texas Instruments. They reported earnings here, just kind of all coming in at the moment. Told you it's going to be a busy week. Texas Instruments looking good, not only because of the Chinese news and the semiconductors been doing really well. They beat on earnings. Revenue was basically even. They guided higher, stocks higher after hours here, so very exciting there. You got Snapchat. SNAP is the ticker symbol there. They're higher as well. Now, they didn't make money, right? These guys lose money, but they lost less than expected. They were expected to lose 10 cents a share. They lost 6 cents a share. That's a win if you're a company that's trying to grow. I know I give companies that don't make any money a hard time, but that's a win. Another win, daily active users, something that everybody always checks out. That was higher by 13 million. So they beat by 13 million. Not like a beat by just a few 100,000. They beat by 13 friggin' million. So they also guided higher as well. And so because of that, now you've got a recipe for markets higher here after, going into tomorrow as well. Careful on some of this, a little bit extended there. I should point out real quick, your FANG. Well, some of your FANG names, you got Facebook lower after hours, Amazon initially lower, Google lower, Apple lower. There's a report about the Department of Justice doing another investigation in them. That's all just coming out right now. I didn't have time to look into that too much, but those stocks taking a little bit of a hit here after hours. So what do you got? Earnings season. So far, they set the bar low, and we're beating that bar. We're expecting about 3% growth. We're at 3.36, not including what we had today. So a little bit better than expected. You've got about 20% of the S&P 500 that has officially reported earnings, which is, shows you how much that we still have left to go. 78% are beating on earnings and 67% beating on revenue. Revenue growth hovering around 3.5% in that case. And so average beat rates, by the way, for the last 5 years are 59%. Average beat on revenue, 56%. Just lets you know we're doing better than expected, and it's getting better and better and better. So you're pretty excited about that if you happen to be participating in some of this stuff. You're just a happy investor, right? Especially if you have some of these stocks after hours. Now, stock price reaction. I know it seems like everything's exciting here after hours, but in general, so far, with the 20% that have been reported, stock prices are essentially flat, meaning take a stock that went up by whatever percent, take a stock that went down by whatever percent, add them all together, all the stocks that have reported, and we're basically flat. So we're right now sitting at a gain of, a loss of 0.03% is the average reaction to earnings, meaning almost no reaction, okay? So that's okay. I mean, that's not typically a bad thing. That you should know that number's moving higher. So looking pretty good there, and that's just because we're beating on earnings. Phew. Okay, that's that part. All right, let's go over to the sectors here. All right, so sector-wise, I'll actually start with the dollar. Dollar hit new highs today. UUP is an ETF you can use to track that. We moved up just up to new highs and kind of flatlined there. A little bit of a breakout on the dollar. You got basic materials. There you go. Broad rally across the basic materials sector. It's not an exciting area to look at. I use the XLB to check that out. If you want to dig in there just a little bit, I did just a little bit homework. You got Echo Labs makes up 7.5% of the sector. Looking like a little bit of a breakout there, if that's something you're into. You got Sherwin-Williams. There you go. Sherwin-Williams had a good day today, about 8% gain on the day. That makes up about 5.5% of the sector. Happens to also be a stock that we own here in our funds at Jazz Wealth. The CEO said gross margins would improve after beating on earnings. Beat on earnings. Revenue was a little bit weaker. Guidance basically flat. But he said, you know what? Gross margins overall are going to improve. And hey, I'm happy. 8% little pop on that stock there. We go over to the home builders. You're going to see that the home builders pulled back a little bit today. It's okay, right? This is a nice little pullback. It's flirting with breaking through this uptrend here. But in general, it's a nice little pullback here in the short term. A lot of that's going to come from Pulte Homes, I believe, was the pressure there. Yeah, 8.3% lower on the day. It makes up about 4.5% of the sector. You had some weakness there on that in the home builders because of that, and I think it's okay. I think that pullback there is more than normal. Existing home sales a little bit light, but that, like I said, that doesn't eat into the home builders, just has a tiny little impact on it, so not too big of a deal. Got to point out the semiconductors. They're on fire, right? You need semiconductors and you need banks to move the markets higher. You got semiconductors moving higher today, and it looks like they're going to start higher at least tomorrow to start the day. Coming up into a little bit of resistance. That's not going to be just sort of blown through, and nobody's just like not going to pay attention to that. So maybe a little bit of pressure here in the short term. Also extended in the short term. I brought this up yesterday, just kind of saying, if we did pull back, you really wouldn't mind so much. A lot of the new highs today came from semiconductors, and they're all just a little extended in the short term. See that? Going a little too far, too fast on names like KLA 10 Core, Applied Materials. There you go. Just a little bit extended there. And so I'm going to basically say the same thing I've been saying since yesterday. You'd be okay if this fell. Right? If it had a few bad days, these semiconductors, you got some people taking profits, you'd be okay with that. I think it'd be more than fair. Especially meeting up in a known resistance area and a very obvious resistance area. All the technical traders that love looking at this stuff, they're going to say, maybe I'll just get out of the way. So that's that one. You got Mexico. That's your weakest area in terms of countries. So this is your biggest decliner week over week in regards to all the countries that are out there. We track all of them here, and this is your biggest decline. It's a rapid move to the downside, sort of a reverse picture of the semiconductors. Not that they're related or anything. I'm just sort of pointing out technical pattern there. A little too far, too fast in the short term. A lot of people looking for a little bit of a bounce there. And so sector-wise, that about wraps it up. You look off to the right here, you see in the dojo, if you're following along, you can see a lot of sectors had a great day today. It's all good. Utilities a little bit lower on the day, and that's okay as well. So we'll go with that. All right. What else do we have here? In the S&P 500, you got 77% of the stocks above this blue line, the 50-day moving average. Just lets you know that most of the stocks are nice and strong. Everything's going really, really well there. It's about mid-range in terms of like the sort of what we've been giving you here for the last few days. To keep track of it, 82% was the high end of the range there. So we're about mid-range right now. And of those stocks above the 50-day moving average, 46% of them are within 5% of hitting a new 52-week high. That number's come down a little bit. You just have a couple little cracks. I'm excited about what's going on. Everything looks good, but you do have a few little worry spots in the market. I pointed that out yesterday. So that sort of bugs you a little bit, and you can see that in those new, on the 50 stocks above the 50-day moving average. So that's okay. Not going to freak out too much on that one. All right, new highs, new lows. You got 22 new highs, new 52-week highs today. And a lot of them came from semiconductors. So I pointed out the AMAT, I pointed out CLAC, right, KLA, and we'll point out Lam Research now, another semiconductor. In fact, 6 of the 22 names today were all from the semiconductor space. You can understand why now, knowing the China news and everything we've already covered. Analog devices also hitting a new high there as well. And then you had Kansas City Southern, right, after all that mess in the rails last week with CSX reporting earnings and really putting a big dent in that category. Everything's recovered here. Kansas City Southern back to new highs. And in fact, you've got Norfolk Southern reporting tomorrow. Make sure you're accurate with your information, sir. Make sure you're accurate. Here's it tomorrow. Yeah, they're going to report earnings tomorrow, so the stock a little bit flat there. If you're following the rails, it's just their turn in earnings cycle there. As far as new lows, they're basically all those retail names we've been talking about. You got Nordstrom making new lows here again. Some buyers trying to pick up that bottom just a little bit. You got Kroger that broke down yesterday. A little bit of just a light buying going on there today. A little bit of a tail on that. I think it's pretty early there. That was a pretty big beat in the face yesterday. And then you got Urban Outfitters, also hitting new 52-week lows as well. So there you go. I think I've kind of breezed through some of this, maybe a little bit faster than I was thinking. That's awesome. If you're looking at Coke and their earnings, obviously great earnings announcement there. There was a focus on the zero sugar line, double-digit growth there. I didn't dig into it too much, but if that's what causes it to go higher, I'm happy. We own that stock here at Jazz Wealth, so I'm more than happy with that one. We covered Sherwin-Williams. All right, let's cover something real quick. Your sort of lesson of the day. Consumer discretionary products, or your cyclical area. I'll use consumer discretionary to point this out. Inside of this sector, you have 27 little industries, meaning, hotels, auto dealerships, airlines. You break it down into little categories, and the analysts and everybody refers to it as industries. Well, as of now, in this sector, every industry is currently positive. That's never happened, by the way. So if that's something you like to look at, you have every subcategory of this sector currently positive for the year, as of now, right? And by quite a bit, I should add. Anyways, this has never happened before. So if you were to try to study something like this, you go, okay, never happened before. That must be good news. Well, if you break down all 27 categories and you go, okay, give me at least like 70, 75% of them. Show me a year where 70 to 75% of them were positive. What happened after that? Actually, there was only one time where the S&P 500 finished the year negative. Every other time it finished positive. But here's the catch. This is the lesson of the day. Not one time did the S&P 500 finish with a gain of more than 20%. That may not mean much to you, but remember we've been talking about the markets have had such a great start to the year, 20+%. We went back and looked to see how often do we finish here or better, and it's not. It doesn't work, right? It's not. It's just not that case. So here's yet another sort of study to back up other areas and go, all right, well, if we know that the odds of the market finishing at 30% or 40% are not good at all, could we find anything else to sort of justify that or back that up? And so I wanted to share that with you, that there's nothing wrong with there being a positive year in the stock market, but not one time when consumer discretionary products, the sort of products that we all go out and buy, and we use the airlines, we use the hotels, bars, restaurants, things like that, not one time did we see it finish over 20%. It just lets you know that the markets could potentially have a nice little strong pop here, everything could be good, and then they could just sort of fade away and finish strong. We could still have a 20% gain on the year, we could still have a 30% gain on the year, but we're more than likely not going to see 30, 40% gains. So this train has to come to an end at some point, and that's okay. All right, as far as earnings tomorrow, Facebook will be the main focus there. It's after hours tomorrow. It'll be the main focus not only because it's like the most interesting, it's the biggest, I believe, out of the group, but also it beats on earnings 96.4% of the time. And so it's the most consistent in terms of beating on earnings. Has an average gap, we covered this yesterday, or an average one-day move the next day of about 7%. So you want to, know that it's likely going to be very volatile. The most volatile tomorrow will be Tesla, and this will get a lot of attention as well. 7.8%, nearly 8% next day move. I think you get it, right? If you've ever traded Tesla, you understand. I mean, it's pretty volatile stock. We're all okay with that, right? Nice and volatile. All right, what else do we have here? Hasbro, we don't own that one, sadly, but that was a good day for Hasbro today. Shot to new all-time highs, beating on earnings and beating on revenue. Just a killer move right at a 10% gain on the day. Intel, I don't know where that one finished, actually. I saw it earlier today. Yeah, all right, about 0.75%. It is reported that Intel is in advanced talks, by the way, to buy the smartphone and modem division of Intel. Remember, there was this big deal from before. Oh, you can't see it. So there's the sort of performance there today. But remember, there was this big deal before where Apple had went and was trying to get around using Qualcomm. So they went to Intel and they said, Intel, make the same stuff that we need here and we'll just buy it from you. And because they were, fighting with Qualcomm. And so Intel basically raised their hands in the air and said, we can't do it. We absolutely cannot do what Qualcomm is doing in terms of technology. Well, wouldn't you know, it was like the very next day, Apple was like, okay, we're going to go shake hands with Qualcomm. We're happy. We won't sue you anymore. Don't worry about it. We'll just settle our dispute, pay you a bunch of money, and move on. That's because Intel couldn't build the product that Apple was looking for, the chips, right? So Apple now seems to think, we'll just buy what you have, Intel. It's apparently not worth a whole lot. I'm sure it's worth billions. But, they're like, we'll buy it, and we'll see if we can develop it. And it seems that that's what is going on at the moment. We don't know for sure just yet, but it sure seems like that is what's going on. And because of that, you got Apple up about 0.75% as well. There you go. What else? Realogy a little bit higher on the day. And United Technologies, that stupid fly is in here again, isn't he? United Technologies also higher. We covered that already. Good. I have officially covered everything, I believe. Okay, wait, let's do earnings for tomorrow, because you've got a lot of them. You got Anthem reporting earnings. That's a healthcare stock. Boeing reporting earnings. Remember, they're going to charge off $5 billion, by the way, so that'll be in the headlines. Boston Scientific, Caterpillar, General Dynamics, Norfolk Southern, Northrop Grumman. Wow, say that twice. UPS, Ford, Facebook, Las Vegas Sands, O'Reilly Auto Parts, PayPal, and Tesla. Woo. So we will do the same tomorrow. We will try to make sure we cover all of this for you. As far as dividends, you got Delta and CVS paying out 40 and 50 cents respectively, and Fastenal paying out 22 cents. So you might see that as well. The Russell 2000, well, you're going to see that as well. Russell 2000, a little bit of a good day here today, but just, again, nothing to write home about just yet. It's it's unfortunate. You know, you're trying to get sort of excited about this, but at least they had a good day. All right. Any questions? I'm happy to answer them, and then we're going to move on from there. You guys talking to each other? I won't get in the way of that. The strength to hold in down markets, right? Yeah, that's the biggest thing. I mean, I spend a lot of time on that, teaching customers like when the markets fall, how bad do they fall, what's averages, what's your median declines, how long does it take, how many days to recover. We put a lot of effort into those types of studies because if we can solve that part, then these days are easy. Right? Holding through uptrends is just a matter of squeezing out every ounce of gain you can. But when you start falling, I can't have everybody getting emotional. If I can pull you through getting emotional, that to me is the biggest challenge. And know that if I can get you to the other side, you'll be just fine. So that is true. That is true. Would it help Intel if Apple buys their mobile chip department, or would it help Apple more than Intel? It would probably hurt Apple in the short term because we all know that it's not amazing technology unless there's something I don't know about. But that's it. Thoughts on Zoom? Yeah, recent IPO, profitable already. So naturally, you know, deserving of the sort of response they got there. It's still finding itself, right? There's always this, every stock has a personality, and I get made fun of for that sometimes, but go trade a stock for a while, then go trade a completely different stock, and you will see it. They're like little dogs. They have their own little personalities, and that is so true in stocks. Any person who's very, very active in trading will tell you that. And Zoom is trying to find its personality. It's not quite settled in yet, although, you know, the company seems to be doing great, and you can't argue with them making a profit and going public when they make a profit, so kudos to them. Can you do a video on the back room like the analysts that you have, and can you meet them? That would be cool. Yeah, you're going to take maybe just a little bit of alcohol to get a little bit loose for that. Not for me. I'm happy to do it, you know, but how much longer do you think semiconductors will keep climbing higher? Really looks due to a pullback. Yeah, I'll keep the same comments there. I mean, I think in the ultra short term, if they did pull back, no big deal. You know, you're sort of welcoming that. Oh, shoot. Sorry, I typed the wrong one. So semiconductors just obviously a little extended here in the short term. You welcome a pullback. Just a calm little pullback. We mentioned that after that big gap up. Just a calm little pullback will do the trick. You got it. All is good. Same thing. A little too far, too fast. I would welcome a pullback. Now, if you could really pick, if you're a technical guy, you hope that you get above this prior resistance area, settle up there for a little bit, then pull back, right? Because if we blast off over this top and start pulling back right away, you're going to have a lot of people thinking it's thin air, meaning it's a lot of stop losses from short covering. This is not that type of setup, but you'll have people that think that. And so you don't want to see that. If you could just see us pop above here and really throw people off guard for a day or two, then move sideways, I think you could really have a nice rally there. But we'll see. We will see. Max Linear, what's the question here? So you got a stock that is very quiet, right? Overall, just not participating here in the short term. You don't like to see that, but I'm not sure what to say about the stock. Long-term, short-term, what do? You day trader, hopefully not day trading it. Jeff, if you got hit by a bus, what happens to accounts at Jazz Wealth? It's actually required that you have a contingency plan and a backup plan. So it is actually a plan, I almost said it, but a plan that is reviewed by the SEC to make sure you are doing the right thing. They actually just reviewed everything that we have. And so you have to have a plan with your brokerage firm so that they know in the event that something happens, who is going to take the reins and call the brokerage firm to let them know. You also have to have a backup plan in terms of if I'm the advisor for so many accounts here at Jazz Wealth, then who's now going to step in and do that? What's the plan? And also a plan for, and it's sad, but because of 9/11, you have to have a plan for the absolute unexpected. Literally like a bomb blows up the entire building. Where's all the data, right? All of our data has to be stored in 2 different locations that are off-site. You can choose one of them on-site if you want. Anyways, it's a long story, but just know there's a plan upon a backup plan. Not because I'm that kind of guy or we're that kind of company, but because it's required if you're going to be an advisor and try to, offer your service. Oh, I thought I talked about that. Thanks, Dane. Yeah, I did talk about well, that's okay. So you weren't here maybe, and you missed it. Yep. How important is it to have all the sectors in your portfolio? Actually, I did a class on this for customers where we did all the asset classes individually to see large cap, small cap. We went through everything and said, where's the best place to invest? And then we said, tell you what if you lump them all together equally weighted? Would it be better to just invest in all of those? The answer is no. You do reduce a little bit of the volatility, but you give back some of the performance as well. But it was a cool little study we did in one of our classes here. So it is not important that you have all the sectors covered, unless you're just trying to squeeze out the volatility a little bit. I don't know how else to say it. Not important is the short answer. Yeah. Oh, you guys are talking to each other. Okay, cool. Name a couple analysts you like to follow in a tech space and in the cloud space. I actually don't look at their names very often. I look at what company they're from and I look at their stats. You could look it up. You could certainly find a favorite in there. I think a lot of the results or the history of each individual analyst are pretty much public these days. If you're on like TD Ameritrade, I believe E-Trade has it. They had it. I don't know if they still do. You can actually just go right in the platform, look up the analyst ratings for everything that you like and see their names and sort of their exact ratings and history and stuff. You can't do it on like a Robinhood, things like that. That's the downside to those, but you can absolutely look it up. Mm-hmm. I don't look at the biotech space, so I wouldn't be very helpful in that sense. I really don't look at a lot of these. AbbVie, I don't do well with those. You bought more Roku today. Okay, I mean, that's your... I can't blame you for buying a strong stock. I don't have really much else to say about that one. So far, so good. I mean, you hope it pulls back, by the way. Even though you just bought some more, don't you kind of hope it pulls back? And you say that for a lot of stocks. Like, come on, just pull back a little bit. Am I the only one that wants like the stock market to fall just a little? Not a panic, not a scare. Just come on back. What do you think will happen to the airline stocks when they unground the 737 MAX? Will they ever unground that thing? Naturally, it'd be a positive, not initially, but in the following earnings report, that's where everyone's going to get their first glimpse at like how important really was that. Because right now we're all sort of estimating the profit loss that they have there. You'll actually be able to see the profit gain from there after a quarter later, unless you want to do some math. And so I think that would be the first time to tell. I would be guessing if I gave you an answer. Yep. A lot of great comments on Steven's portfolio. Thank you so much for participating in that, actually. Yeah, a lot of great guys. I saw that. Thanks for the support and everything. I did talk with him, and I think it was really helpful. Yeah, I appreciate it. It was different, right? A different type of video, so I'm sorry if that didn't fit the bill for most of you that like to watch that stuff. All right, cool. I think I answered it. I think you're going to see a fall on the 31st, alluding to the Fed announcement coming out there. JP Morgan put out a note that basically yesterday that said if they do not cut rates on the 31st and make that announcement, that the market is very, very, very vulnerable to a decline there. So I would tend to agree with them, but it seems like they're just going to cut the rates. So we'll see, right? We'll see what happens. I think it's a positive, right? If they do cut the rates in the short term, it's a negative in the long term. We've studied that for our customers. We've shared that information with you. So there's no doubt, I'm a numbers guy. I'm going to go by the numbers there. I think Brexit's sort of priced in, especially with the new election today with Mr. Boris. He's apparently, I don't know if he changes his mind, but he's apparently just super dead set on come hell or high water, we're leaving, right? And he's always been that way. I've seen him speak. I only pay attention because of his hair. It looks like John Daly. But anyway, side topic. I think people price that in at this point, right? Unless he starts to waver on that. But how does it impact our markets? Not much. I don't think anything happens here. Nope, not a good time to buy Bitcoin, in my opinion. I'm just giving you my opinion. I'm not telling you to buy or whatever, but I just think you could be patient on it, right? I should take that statement back, but I would say after that big rally that you saw there, normal for it to chop around for a while. It's also normal for any stock to do the same, and therefore I would be patient. I'd be in no immediate hurry. Before I get in any trouble, I'm going to wrap that up. I think right there would be a good place to stop that for the day. I appreciate you guys watching. We will be back tomorrow. Of course, we got a busy day of earnings, and then next week also busy as well. I hope you'll join us for it. I appreciate you watching. And yeah, we'll be back tomorrow. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.